Hey traders, welcome to This Week in the Market. Hope everyone's been having a great weekend, a relaxing one. We do have some significant data slated for this week, so it should make for what's been kind of a quiet April, could wake things up. Let's talk about, I'm going to cover a couple of the things that are making their way into the issue of This Week in the Market. By the way, this Thursday, if you haven't already seen the, here we go. If you haven't already seen the link, we do have, if you go to the home page, I believe you'll see it right there, Raghee's Guide to a Weekly Trading Plan. We've got that coming up this Thursday at 4. Super stoked about that. We're going to be taking a look at some of the processes that I go through. What's the process? What's the thinking to get the most out of your time, to understand what the markets are most likely to do and where? In other words, a lot of trading isn't just finding your favorite symbol and just coming back to it again and again and again. A lot of trading is finding the direction that you need to be pointed in, whether that be at an index level, at a sector level, whether that be a macroeconomic reason. Maybe it's focusing around a particular data point, right? Maybe there's a specific event that we have on our radar. Those are the things that we're keeping an eye on. Those are the things that are so important. And that's what I mean by getting us pointed in the right direction. That's what This Week in the Market is all about. I'm going to be talking about a lot of that process and what goes into that process and what are the things that you need to and want to be keeping an eye on. We'll cover that this Thursday at 4 p.m. All right. So let's go ahead and take a look at what we've got coming up. I mean, frankly, I could scroll through this entire week for the most part. We have consumer confidence numbers. Okay, that's not that interesting. Advanced GDP. Yeah, I'm even scrolling past GDP. We know that the Atlanta GDP now has been setting some expectations. Advanced GDP on Thursday. Certainly not one to ignore. But it's not till Thursday until we really start getting some data that matters. And I mean mattering by, is this going to change what the Federal Reserve is going to say or going to do? I mean, that's all that macro really is about. So if you take a look here, and I'm going to scroll to Friday, and you'll notice right here, core PCE, 8:30 a.m. on Friday. Why does that matter? That is the Federal Reserve's favorite little inflation gauge, and seeing how that is where their attention is, that is where our attention is, and that's what's going to change hearts and minds about what's coming up in terms of, frankly, the only thing that matters. Am I going to minimize the current environment to, we know that the Federal Reserve is thinking about how many more hikes they're going to make and when are they going to cut? That's probably pretty on point. The question then becomes timing. When we have timing, when we have expectation around timing, that's when we're going to see flow. That's where we're going to see involvement. That's where we're going to see the confidence and the certainty that we can put money to work in different corners of the market. All right. Having said that, is it for the most part absolutely baked in that we're going to have a rate hike in May? Yeah, there's just really no question. This is a nearly 90% expectation for a quarter point hike. So that's going to happen, right? We're going to go from this 475 to 500, and we're going to take that to 5 to 5.25%. Okay, no big deal. That's been discounted to some degree for many, many weeks now, and it's just increasingly convincing. Like I said, 89, that's 89.1%. If you can't see that fuzzy little text, that's the expectation. Anything above 80, to me, reaches that fully discounted psychology. When people say, oh, something's fully discounted, this is what I'm looking for, over 80% expectation. Okay, after that, we're more likely to hold, but this is before we get that PCE data and even the GDP data this week. These will likely change, and we're not expecting there to be not a hike in May. What we are expecting is, how long will we hold? How long will the Federal Reserve take a hiatus before they come on back, Fed pivot, and start talking about when the cuts come? Now, this is not a crystal ball, but it is a communication device. It's a two-way radio, if you will. We collectively, as traders and investors, are committing to the Federal Reserve. This is what we think you're going to do. So the Federal Reserve is absolutely crystal clear on what is disappointing to the market broadly and what is within expectations to the market broadly, right? They are without a doubt crystal clear about what it is that we think is going to happen and at which meeting. They know Jerome Powell this morning, Sunday, opens up his paper, goes and takes a look at his Bloomberg terminal, and he knows that come September, November, we are expecting to pivot, whether that be a verbal pivot, whoopsie, we went too far and now we're ready to start cutting, or whether it's an actual 25 basis point cut, which, by the way, is the most factored in for November. Regardless of what that is, by November, Fed Fund futures say, you better darn well give us a cut, Jerome. It's not a matter of whether it's going to happen. This is why equities are rallying, because this is what's being discounted. And that's macro in a nutshell, gang. That's the only macro that matters. And therefore, inflation, jobs, growth are going to be the data points that we watch that change this stuff, okay? By the way, this is the CME FedWatch tool. Anyone can go check this out for free on the interwebs. So if you search CME FedWatch tool, read it like I just showed you, and I've talked about this a lot in the free videos back at the Simpler Trading YouTube channel. You can check it out, track it for yourself. You don't need to listen to the chuckleheads on television. Heaven forbid they actually tell you this is how you read it. No, right? They've got to make it some big secret. They've got to speculate wildly because, they need us tuned in to watch the ads. You know how the game was played. Do it for yourself. Understand why. Make decisions, right, from that. Okay, moving on. So we got the economic calendar out of the way. The economic calendar is kind of interesting, Thursday, Friday, but this is where things get really interesting. And this is when we head on over to, here we go, the earnings calendar, right? Earnings season, I'll be honest, it bugs. It's irksome. And why do I say that? Because what we have when we look at earnings is a group of stocks that once upon a time we get some mail, and we would get sort of the quarterly earnings information in the mail. There wasn't all this brouhaha drama, watching, phone calls. This is relatively unique to the modern market, where earnings has become a festival of volatility, really. And it's not been great. I think when folks ask me, Rog, why don't you buy and hold anymore? I'll be quite frank. It's the way in which earnings have become a spectacle. It has truly changed buy and hold. Anyway, that said, for traders, it's great, right? There's volatility to be had, and there's movement that's going to allow us to possibly get some opportunity. And movement where? Well, this week, if you take a look, this week is especially massive for the Dow. Right? This week is especially really important for the Dow. If you take a look at what is getting ready to come out, every single earning in the Dow is going to be I believe it's a top 11 or top 15 name. So it's pretty darn significant, the different earnings that we're getting. And I'm looking at the newsletter right now. Yeah, we've got the list and the discussion. Every one of these is I believe it's a top 11 weighted name, or even maybe top 10. Weighted name. So each one of the Dow earnings, by the way, 3M, McDonald's, Microsoft, Visa, Boeing, Cat, Honeywell, Amgen, right? That's what's coming this week alone. The Dow's got an interesting set of numbers to contend with. Microsoft and Google, of course, landing squarely on the NASDAQ and the S&P. Meta, NASDAQ, and the S&P. So we have a lot of very interesting data coming up this week. And Amazon, how could I forget Amazon and Intel? What gets really interesting is we're still a couple weeks off before the Apple earnings on May 4 and the Federal Reserve on May 3. So this is going to be these 3 weeks here, gang. Last week, this coming week, the week after. This is really probably the most volatile and arguably the most important 3 weeks within earnings season. All right. That's what we got we've got as far as expectations for what is likely to move the market. Let's jump on in to your questions as always. All right, so let's jump into the charts. All right, and grab our first question of the show. Good evening. Good evening. All right, heads up. Caught you in time. Lucky me. That's awesome. Top spin. All right, CAG. All right, first symbol. CAG. Not looking good to bears. Conagra. I wouldn't say that. I would say that the bulls mildly have an edge because we're above two things, right? And let's do this. Let's just look at 2023. All right. Let's just look at 2023. And you'll notice that where do the bulls have an edge? It's two things. One, and I wouldn't even count this second thing as an edge quite yet, but we are above the 200 propulsion, right? This is the 200 exponential moving average and its interaction with the 8 exponential moving average, right? That's what that is there. This is the point of control. This is the most amount of volume that we've seen at a singular price level since the beginning of the year. All right, that's what this is right here. Okay, so then we can move to what's next. This is tough because I don't have a trend, so there's no mean reversion really that I want to focus on. Volume ledgers are somewhat interesting, but not until, notice how the volume, let me show you something. This is volume profile. This is all along this hard right edge. It's all volume profile. Notice how the volume starts to get a little thicker, right? We start to see the sideways histogram, right? It gets a little bit thicker as we get closer and closer to that level. That's about, on this daily time frame, top spin, that's what I'd keep an eye on. Whether or not we sink from here or move higher, that's a much more near-term conversation. Point of control, volume ledge. You can see the battle is happening there for about the past 2 sessions. Keep an eye on basically 37.50 down to about 37.30. Watch those 2 volume ledges. Again, that's where, sorry, gang, but I don't know if I have cat hair in my face or what. He loved my cat. When I'm working on This Week in the Market, the cat loves to come check out what I do. He'll sit right in the middle of the desk. He'll look at all the monitors as if he's got something really important to say. So when I take a look at those zones, that's what I'll be looking at very, very near term. All right. Thanks for the question, Topspin. Next up is, let's see. I've got JJ. How are you? JJ, Ford. Sure. What are my thoughts on Ford? We've got earnings coming up, as you can see, May 2. If you take a look at the year, what I would do here, JJ, is a couple of things. From bottom up, this is a sideways market. When I've got a sideways market, I want sideways market tools. Sideways market tools are, everyone might have their favorite. Mine is a slow stochastic, right? The slow stow, as I call it. All right, so I'm going to put a slow stochastic on there. For those of you that are not familiar with the way that I use a slow stochastic, it's a 21K. It is a 3D setting. The upper level is going to be 80. The lower level is going to be 20. Set that up. Use it in a sideways market. You'll be astonished and amazed at its accuracy. I'd like to find an oversold level. I'd like to find an oversold level as we're reaching down to different support levels. Notice I automate the support with the Darvis 2.0. So I'd like to find either a price-based support, because that's what this is, or perhaps you find a volume-based support, like we were just doing with Topspin's question on CAG. You can see we have some volume-based support in these areas. Again, what these tell us is how much volume occurred at that price level. With this gap, you can see that quite a bit of volume right where the gap initiated and quite a bit of volume where the gap opened up, right? So here's your gap right in here. And if you look to the volume, you can see where it corresponds with size, which is important, right? It doesn't matter that there's more volume at a particular level. I absolutely believe there is. Can I be a buyer here? The overall sentiment in Ford is not going to be bullish because we're still below, as I like to call it, that 200 that we were talking about before, the interaction of the 200 and the 8 exponential moving average. That's the equator, right? So if you're south of the equator, in this case, on a stock chart, on a price chart, we're in the bearish hemisphere. And generally, you will find there is very often mostly bearish sentiment on any symbol, stock ETF futures, when it's below the 200 exponential. Something magical about that. It could be 200 simple. They're going to be in similar areas, but there's something about that. Could we get back up to that level? We have before. We were rejected. Price was rejected here. Yes. So if there's a buy to be had, whether that be a Darvis, whether that be a volume zone, remember that area is still going to be that 200 exponential is still going to be something we're going to need to keep an eye on. Would I rather be long down near the lows of an overbought support zone? Absolutely. So that's really what I'm sort of spelling out here. That's what I'm highlighting on this chart, JR, what it is that would make sense to focus on Ford with a long bias to the 200, and then we'll see what happens after that. All right, and next up is, thank you very much, Topspin. I appreciate that. Thank you. Smash that like button. All right, next up is, let's see what we have here. Google, sure. All right, so if we go on back here and we take a look at this week, two things to think about. Where is Google weighted in the world? And I know the obvious, right? We can talk about the NASDAQ and the S&P, which is important. But what's not so obvious sometimes? The XLC Communications, the number 2 weighted sector in the NASDAQ. Google's earnings are on Tuesday. And then that's not enough. Meta's earnings are on Wednesday. Now, why would it matter to Google that Meta has earnings? Because Google and Meta are the top weighted stocks within the XLC Communications ETF. It does matter, and each will affect the other. How many times have you seen FedEx with news about FedEx and UPS sells off, or vice versa, right? There's a lot of connection like that. And whether that's because of weighting or that's because of the industry, you're going to find weighting and industry travel the same path. And when it comes to high concentration weighting and indices and sectors, tough to separate the impact of Meta on Google and Google on Meta. All right, so then the next question is, as I take a look at Google, as I take a look at what we've got going on, and by the way, if you have never been on over to Estimize, right, please do. Please do. And the reason I say that is, I already typed it in. See how Google, I've already followed it. Go to Estimize, start a free account up. It's going to allow you to follow the earnings of the stocks you want to follow. And you can do so in a way that's more than this is coming up this week. It's far easier to track things that are 2, 3, 4, 5 weeks ahead of time, which is the way that I prefer to do it, which is why I'm a big fan of Estimize. So that's really where the Google conversation starts and frankly ends for me, because I won't think about Google again. So think of it this way. 24 to 48 hours before earnings, I don't want anything to do with a stock that's just right around the corner from earnings. Then I'm going to wait another 24 to 48 hours after. So whatever it is that happens on the earnings day, I'm going to wait for the dust to settle. I'll reevaluate what we're dealing with, and I'll see, do we have any proximity to, well, a volume ledge like this? Do we have any proximity to a Darvis, right? Are we testing the 200? Where are we? And then I'll decide what my setup is in the aftermath of the earnings. And that's the way that I'll look at any stock going into its earnings. Every earnings season is that 24 to 48 hour window before and after, where I'm just going to leave the thing alone. Now, the run-up, 6, 5, 4 weeks before, and by the way, 642 is my breakdown. If you've never heard me talk about 642, if you're unaware of that, if you head on over to the Countdown Trader, which is countdowntrader.com, and you'll see this right here, April 18th. We're in earnings season, and I love that we posted this thing again. I know some of you might be familiar with it, but Trish thought, you know what? Let's make sure everyone knows what this is during earnings season. And check that out, April 18, 642 earnings window strategy. I go through all the details in that. So I love that she posted that again, because it's a really pertinent conversation. And you'll see we go into quite a bit of detail about how I like to look at earnings. You can do that at countdowntrader.com. And that's where that Goog conversation is really going to be. I think it'll probably make a little bit more sense, Billy, in terms of what I'm doing, if you're not familiar with it. All right. Next up is, Dean, it got moved to Monday. Yeah. So we were releasing This Week in the Market on Fridays, and then we realized for any number of logistical reasons, including my getting it out to you all on Fridays, was becoming a little hard pressed with the schedule that I keep in the Sector Secrets Mastery Room. And so we said, you know what, let's just make sure this thing goes out the way we want it to. And I can still make sure that I'm, carrying the load over in the Mastery Room. So we thought, you know what, let's just move it out to Mondays. And then, and that's what we did. So this is the schedule in the Mastery Room. And the reason I bring this up is if you're a Sector Secrets member, you also get This Week in the Market as a part of your membership, right? So we'll be releasing that on Monday and then going into our sessions in the Mastery Room. Okay. So whether you're part of the Mastery or not, this is just a really good complement to the Mastery, but This Week in the Market absolutely does stand on its own. And like I said, this Thursday, if you want to get a better idea, okay, Rag, what are you putting in there? What is it that you're looking for? What's the benefit of having this Thursday at 4 p.m. at the Simpler Trading YouTube channel? We're going to be talking about how do you structure your homework for the week? How do you set up a process? And I'll share with you what I do. And that's what makes it into This Week in the Market. Okay. All right. So yeah, that's going to be going out probably by, I'm guessing 10 a.m. Eastern, probably 10 a.m. Eastern or so. Dean, don't hold me to it. I know they'll be posting it early Monday, sometime after the bell is my guess. All right. Next up is, how do you put those volume ledges, right? How do you put those volume bars on Thinkorswim? You don't, my friend. They have, this is Volume Profile. They have their version of it, but I'm using TradingView here, and it's just so much better on TradingView. You can have different ways of doing it on TOS. I simply do not like the visual. Therefore, I do not use it. And I've played around with it. I've played around with the monkey bars. I've tried a lot of ways to make it as good and crisp as TradingView does it. And I simply cannot find an alternative. So for me, the simple answer is I don't, Sergio. And I use the TradingView to do it instead. All right. So next up is Tesla. Sure. We've got earnings in the rearview mirror, at least. So if you think about the 24 to 48 hour window, we're outside of that come Monday. So it's Thursday, Friday, and now I can think about Monday and what this means. Now, where are we? Makes sense to think about a neutral environment at Darvis support. I would love to see really what could be the completion of a minor low, although not a textbook minor low, or an inside candle break. So, and I am looking to the long side, by the way. This is not going to be a short. It's either I get a long position that I could take either to the point of control or the 200, but I'd be looking for a long if the pattern, the price pattern. I do not use chart patterns, by the way. If the price pattern, and you might say, Rog, what's the difference? Okay. If you're doing, and there's nothing wrong with it, I'm just pointing out what I do and don't do. So if you're doing things like this, and if you're doing things like that, or things like this, that's a price pattern. And frankly, it's very subjective. Why do you connect one dot to the other? Why do you go a certain, again, I could draw lines all over this thing, right? The reason anyone draws anything is because through usually a very subjective criteria, lines, dots appear and like connect the dot. I mean, look, that's arguably to me borderline ridiculous. But if someone were drawing trend lines, it'd probably have something some version of this. Okay. Not going to do that. What am I going to do? I'm going to automate the process of support and resistance with my Darvis levels. And what that allows me to do is let a process, I'm not drawing those manually, right? Let a process step in and tell me where support and resistance are, right? That's what I want to happen here. Okay, so that's one thing I'll do. And then the other thing that I'll do when it comes to trying to find support and resistance in lieu of drawing trend lines is I'm going to look for volume levels. So again, when I talk about price patterns, right, talk about a volume level, or I talk about volatility, these are automated levels. And when you automate things, you really do take the bias and frankly, the learning curve and a lot of the errors out of the analysis. And even 30 years in, what I'm focused on now is not new and shiny. I'm looking at automating the things that I've been doing for decades. And so that's what you're looking at here. So I'm looking at specifically a price pattern here, right? And then I do have a Darvis level that's coming in here rather pretty nicely, right? What's not to like about that? And if I could pair that up with a volatility level, if I could pair that up with a volume level, now I'm really firing on all cylinders, right? Okay, next up, Tommy asked, do I approach futures in the same manner prior to the FOMC minutes? If I'm going to trade in front of the FOMC, I don't mind to trade that morning as a day trader. I will not trade the 2 o'clock release, because that 2 o'clock release is first sort of the headline of, did they cut or did they hike? And then we move on to the press conference where that's where the fireworks can really go off. So yes, I would just assume steer clear of the 2 p.m. Eastern timing. However, let's say we step out to a daily time frame or even an hourly time frame, waiting for some price levels that may not have proximity, the ability to be reached on a normal Wednesday, but on an FOMC Wednesday, then maybe they can. And so ultimately, in many ways, not the 24 to 48 hour thing, Tommy, but I will give it some space, right? I will give it some room to move. So yes, not with the same 28 to 48 hours, but I will give it some room to move. Yes. All right. All right. So Matt asked, what are my thoughts on XLC? So Matt, if you're trading or buying the underlying ETF, probably not a problem. However, if you're looking at the options, please be aware that the options at the strikes in XLC can be really spotty. Now, there'll probably be some decent liquidity at 55. There'll be some decent liquidity up at 60. There'll be some liquidity at 50. But other than that, if you don't have a 5, 10, 15, 20 type number, usually in the 5s with XLC, they'll be okay. Be cautious of liquidity, but you should be fine for the 55s. Now, the question is, would I buy the point of control? That's down here around 55, and it's got the 200 giving it some company. I would not mind that, especially if we can maintain the green, right? The green trend, or no worse, transition to a yellow, right? No worse, transition to a yellow. And if that's the case, yeah, I'd be willing to be a buyer. Yeah, you bet. Okay, gang. As always, thank you so much for joining me for our This Week in the Market Sunday Live show. I've got that video special live. That video is going to be live, by the way, on Thursday at 4 p.m. where we talk about the process behind macro, the process behind looking at sectors and commodities and relative outperformance. We'll be talking about a lot of that on Thursday. And that's the process that goes into the This Week in the Market newsletter. All right, gang, be good to each other. I'll see you tomorrow morning for charts and coffee. Until then.